I guess let's get started then. All right. I want to give a big welcome to Jason Hsiao. This man has been always available, always online. I don't, I don't know how you manage to do that on top of running a brand new business, right? Out in, which is essentially a food hall out in the LA area. But Jason is going to be here to discuss coronavirus with us. He's a managing director at Shaw Investments, a multifamily developer and syndicator. He started his investing career by house hacking a two-bed while in college back in 2003. So you survived one recession, but now he controls a $15 million portfolio with investments in California, Nevada, Texas, Kansas, Georgia, Tennessee, South Carolina. The list goes on. He's been featured on a lot of news sites. And outside of that, though, he is an avid snowboarder, hiker, and champion entrepreneur with endowment scholarship set up at his alma mater. He's known for a lot of entrepreneurship, and I kind of want to see what he builds next, especially since these food halls seem to be really interesting. I'm kind of bummed I didn't get the opportunity to eat at one yet. But either way, I want to give a big welcome to Jason Hsiao. So you want to go through some more of this with us, or
Sure. Thanks. I mean, thanks so much for the opportunity, Nelson, and for all that you've done for um, the real estate community. Creating the platform for folks to share notes and ask questions and all that. So just a quick background. I started, like Nelson said, in college, which is a long time ago now. We didn't do a whole lot the first half, but essentially, we bought a few places in foreclosed in the last downturn, but it's really more this last cycle that we kind of went all in. So for me, I also run a meetup that meets on the last Wednesday of each month. Um, and as Nelson mentioned, I'm very big on house hacking, and I think it's a great way to get started and form the habit and discipline of real estate investing in a very uh, not risk adjusted way, but just kind of caps out some of your downside. And especially in California with housing crisis, I'm very big proponent for ADUs as well. I have a little bit of a joke here. I don't, but yeah, I used to say my goal in life is to be on Bigger Pockets one day, but I kind of moved on from that now. So next slide, please. So this is where I basically grew up. I went to high school in UT, sorry, in Austin, went to UT, and that top left picture, that's the two-bedroom condo complex that we bought. And pretty soon after, I think we bought it for like 170, and then we sold it for 190. And I remember recently I saw it,
it's like
somebody,
400, right, in that area?
yeah, well, I haven't seen what it is now, or it probably hasn't traded, but I it's probably been a couple of years, but I remember somebody fixed it up and then they sold it for maybe like 320, 330, something
Yeah.
like that.
Yeah, I was looking around that West College area. It's like, yeah, it's 300, 400.
Yeah. So yeah, 400 probably likely. I haven't looked at that market for some time. And shortly after college, my first job was actually in equities trading, and so I had a little bit of money left, or to invest, and essentially partner or bought share of a bar in Austin, which is what 22, 23 year olds with disposable income, that's probably like one of the coolest things to do. Didn't work out that well. Like I learned a lot of the kind of between preferred shares and LPGP, those kind of stuff. But I remember looking at the financial statements and kind of looking around Sixth Street as well as like, yeah, a lot of these bars, they turn over all the time, but like the building's always there. And I look at the financial statement, how much we're paying in rent, and the owner was like in Woodstock, New York, somewhere. And I'm going like, guys, I think we're in the wrong business. So it's one of those kind of light bulb moments that I have. And next slide, please. And this is what I was working on lately. The food hall that Nelson mentioned. This is I think this is probably a Google Street View. So this is about 19,000 square foot brick building that Wonder Bread used to own. And way back when, I think Helms Bakery, which is a very well known local SoCal bakery, they used to own this as well. So we essentially adapted, reused this place, and put in tons of infrastructure and upgrades to turn it into 11 tenant space food hall. Next slide. And this is kind of what it looks like now. I didn't get an exact angle, so um, it's it's been pretty tough. I mean, obviously a lot of our tenants there, some are doing okay, not, it's definitely not ideal, and some are having a tougher time, and we're trying to help them to have like promotion ideas, and we're as a build management for the building, we're trying to implement some online ordering and curbside pickup to facilitate some, just cut down on the transaction friction, so to speak, and promote safety and reducing the risk of spread, COVID spread. My idea for today, I think when George and Nelson first mentioned it, I I was planning to do just like a quick rundown of the different asset classes. I figure if a lot of folks, if you've been staying up with the headlines or what's going on, hopefully this is just a refresher, and I will touch on a little bit of what I think will happen in the future, and I'm probably dead wrong on this. Last year,
Hey, well, no one can predict the future. We're all trying.
yeah, I mean, especially with the equities market, like honestly, I don't even know what to think anymore. So feel free to challenge me. And this is
Yeah.
more of a discussion than anything. I'm just kind of
Yeah.
sharing what I'm seeing in the market. Both, I think it's important for stuff like this to use both primary and secondary data. Secondary data are like reports that you see in the news or publication people done, and primary data are like actual feedback. Like, well, you can't do open house anymore, but the more direct survey or pulse on boots on the ground pulse type of thing.
Yeah.
And then at the end, I'll kind of touch on a little bit about, I was thinking about touching on a little bit about underwriting, or kind of just um, how to some of the asset management aspect. So,
That works for me.
um,
Let's dive in.
so if you can go back a slide real quick.
Hey.
So the different asset classes. First one, let's talk about single family homes and condo. Single family home has been on fire. I mean,
Yeah.
a lot of folks are moving away from downtown core, and condo market has been struggling, although it seems like, I don't know for sure, but it seems like it's stabilizing. For example, I have a condo in San Francisco still, and my tenant moved out, and recently I was able to get it rented, and then within the same week of my tenant moving in, there are like 2 or 3 uh, other spaces in our building being, people moving in. So hopefully that's an encouraging sign. Um, single family home, I primarily just been driven by the cheap debt. If you follow me on Instagram, I actually broke down I was curious myself. Essentially, if you calculate your monthly payment before and how much house you can afford or how much loan you can get with the lower rate, and I was using a difference between say 4% and 2.85, which arguably I think it's a tiny bit lower than that now even. In California, essentially you can afford $100,000 more house if that makes sense. So I mean, that makes a big difference. It's like, gradually people are just like, okay, well, yeah, we qualify for more, so like we can pay a little bit more, and this.
Yeah. I totally agree. I've like looked at old mortgage numbers where like they used to be like 18% interest
Oh
rate.
yeah, like in the 80s.
Like,
That's I
yeah.
don't know how.
And like the thing is though, the prices have skyrocketed in coordination because interest rates have just gone down every year since. So like valuations are almost entirely determined because like we keep reducing the cost it is to borrow, and then people are using that leverage to generate like returns, which is technically like very unstable and it's easier to collapse at some point, but the Burr money print machine goes help us.
Yeah, I mean there's it's definitely a dramatic effect with this cheap debt, and I'm a little concerned myself, right? Like how low can this go, or how long are we gonna be having this? But at the same time, doesn't seem like anything's changing, and
Yeah.
I
I
think definitely if you're underwriting, though, don't bank on cap rates to continue to compress, even though I think chances are it will.
Yeah, I was looking through it myself too, but like I know what you're talking about. I at first I thought, like, all right, foreclosures are gonna come this year sometime. Like forbearance is gonna end. I don't think it's gonna happen. What I've seen so far is everyone's refinancing out their original equity because valuations have gone up too now. They're using that money to just buy more homes.
Yeah,
So like supply is so low that there's not even this dip that I thought was going to happen.
right. Yeah, and then for multifamily, there's the national, I think it's the National Multifamily Housing Council. They have it's been shared a lot. They're keeping track of the collection rate, and it seems like everything's pretty much fine, but you can kind of see month over month and year over year, it's very slowly kind of you know
Reading,
decreasing in the collection rate. But I think it's still like 89-90%, which is uh,
yeah,
incredible or incredulous, honestly.
yeah,
And similar to what Nelson said, we thought, hey, maybe there'll be distress. And I think, yeah, like back in March or April, we came across, I think it was either a 12 or 16 door, I can't remember now, in Long Beach, and
uh,
the seller was under contract, and then that buyer canceled, and then the second buyer actually got COVID and he canceled. So the seller is like, well, I already have my 1031 lined up, I need to close.
yeah,
And I think they literally sold it for $1 million discount. And at that time we were like, yeah, it's probably all right, but it feels reckless, so we didn't do anything with it. But I think these like fire sales that from my experience, from what I saw, was few and far between.
yeah. I knew a guy who in Chicago, the moment Corona hit, started putting in offers at like 25%, like down, just because he was
Yeah,
like, there's got to be some people who are scared.
yeah.
I don't know if he got any of them accepted, but like that was their first reaction was like, now's the time to buy. And I think there was a lot of panic sellers, which would have been a good opportunity for people. Uh,
Right. And then I'll touch on industrial, retail, hotel, and office real quick. Industrial's been on fire. I mean, just I think with the shift from retail to e-commerce, there was a chart that the growth, the gains in e-commerce for the last 10 years, essentially we maxed out in like month and a half or something like that,
yeah,
which has just been again incredible. Retail is a bit of a mixed bag. I think it depends on what you're selling. um, Grocery stores are definitely still fine, and certain retails are better than others. Restaurants are definitely, depending on your state's lockdown or shutdown policies. Some are having a harder time than others, but if you've been able to kind of pivot to more deliveries or pick up orders, online ordering like Chipotle, I mean they have a lot more resources as well, but they created a separate line just for online orders, and they've been doing gangbusters. I'm like really kicking myself for selling my shares right now, actually. Um, And hotel definitely is struggling, but I think we'll see how the vaccination process goes. If it is kind of late summer projection that people are thinking, I think in late Q2 or Q3, there could be actually a lot of pent up demand for travel or entertainment.
Mm,
These $600 or these stimulus checks. I think Biden actually just proposed
too close.
$1,400 more.
Uh,
There's I wish I had the stats or the charts that but I didn't want to plagiarize either. But
yeah.
somebody actually shared essentially the savings rate. I think that it was maybe like 8% nationwide, and during COVID it went up to 13%. So a lot of people, because they're worried or nervous about the future, they're actually they're not using a lot of these stimulus checks. So when things open back up, I think it's very likely you could see these pent up demand to people wanted to get out and travel. So
Like,
office,
uh,
go ahead.
I just wanted to ask, so hotel wise, would you purchase something right now?
Of course,
Uh,
yeah. I mean, I'll get to this later too. I think ultimately, it's it's definitely tough or challenging times right now, but it depends on how well you're capitalized or how much debt you have. I think that is the double-edged sword that um, it's good to have leverage, but too much leverage is also problematic, right? So if you get caught in a bad spot and you have cash flow issues, that's when you lose the property, and that's like the worst case scenario. So if you buy a hotel and you have ways to hold on to it for the long term or medium term, like I think you're gonna be just fine. Like actually, some of my friends are in the hotel space, and they're being very diligent, very active. They picked up a couple deals here or there. So
Gotcha. Okay. Yeah, that makes sense. Yeah.
yeah. And honestly, that applies to any asset class, right? Like
Mhm.
like if you can avoid foreclosure, you're gonna be okay. Like it's gonna be stressful, but you're gonna
Yeah.
be okay.
The government's gonna bail you out. Don't worry about it, you know?
Yeah. Office, a lot of people are working from home right now. And I think some of the bigger offices too, or bigger companies, my observations, most are they're just paying. But there are some they're trying to exercise their muscle to just say no, we're not paying. Like if you go ahead and sue us if you want, and we have a team of lawyers to
Yeah.
to drag this out.
Jeez. Yeah, I've seen that too. And then I guess that rounds us up with retail. How do you feel about uh, what's happening there?
How do I feel about which one?
Retail, right? In terms of
Yeah, retail again. I think it's a mixed bag. So there's gonna be businesses that close or shutter just because they couldn't operate or they couldn't adapt in time. It'll be interesting to do or see some of these adaptive reuse projects, although it's still going to be very costly. And with the exception of a few, I don't know where you're going to turn some of these strip malls or retail spaces or shopping centers into, because the design and infrastructure are just so different.
yeah, okay. You can't just make more food halls out of them.
I mean, the food hall thing I mean, it's a cool concept, but I wouldn't say like it's the right thing to do everywhere. Like if you just put a bunch of food halls everywhere, I don't think it makes sense either.
Yeah.
But like uh, somebody converted an old JC Penney into a food hall that's like 42,000 square foot or something like that. So it's definitely possible. I think a friend of mine actually was trying to find some like vacant commercial space to turn them into a rock climbing gym. So we'll see.
Oh, yeah, that's actually a pretty good idea. Huh.
Yeah.
Okay.
Next slide, please. So Back to the Future. I mean, um, there are things that's going to be permanent and irreparable damage that COVID caused, but I think there are also a lot of things that could basically revert back to where we were before. Um, it's just kind of that's kind of the part that I would say it's up for debate. Um, Related to what we were talking about earlier on cap rate, the the cheap debt
Explain
leads
cap
to
rate real quick too, by the way.
so cap rate is essentially if you ignore financing costs, it shows it's a relative measure on what your return is for a property,
Right.
and it's also it's just a quick metric. Like I generally advise people not to look at a single metric. It's usually kind of multiple, but it can also kind of indicate the risk for a property. If you same property in San Francisco versus I just don't like Cleveland, Ohio, right? Like in San Francisco, it might be a 3.5 cap, but because Cleveland is sort of riskier, it might be 5, 6, or 7 cap instead. So I think with the cheap debt, we're seeing a lot of yield chasing because bonds don't make sense anymore. We're seeing all these cash floating into equities, and with the the stimulus as well, right? I personally, this is what I'm doing is just
Let's hear the tips.
because of the inflation, there are people seriously considering inflation, or sorry, seriously considering real estate as kind of a hedge against inflation as well. So I think you're going to see a lot of folks, a lot more activity once as we move on this year. Um, Single family home, I think this is going to persist for likely another 2 years, but it'll be interesting to see how quickly we recover. And you know, for me, I'm kind of this is a hypothesis. Like if Janet Yellen's in charge, she's more of a dove, and she's gonna be focusing more on the employment and all that. And the Fed has also indicated too they're using an average 2%, so meaning that they want to give it room if it exceeds 2%, say in three, but they all in all, basically meaning they're unlikely to adjust the rates up too quickly. But if we do, I think it's going to be kind of a repeat of, I think it was Q4 2018, where a lot of things just kind of grind to a halt.
Yeah, collapse really quickly,
Yeah.
and then
So,
force them to lower interest rates again.
yeah. And then multifamily we touched on, I think it's going to be more of the same. And believe it or not, cap rate might continue to go down further. Industrial, it's getting a lot of attention. Personally, I just it's just kind of how I am too. I am a little concerned or worried that it's getting too hot too quickly, but we shall see. So far, so good. Hotel, we mentioned about the pent-up demand. I think if you have a way to hold on to them for, let's say, 6 more months, 9 more months, you're gonna be just fine. Like a friend of mine, they actually just bought the LaGuardia Marriott,
Really? Oh
which
wow,
is, I mean, they're a big shop. They're like they used to own the Queen Mary down in Long
that's
Beach
good
too.
to know.
So yeah, um, I think office is the most interesting one. There's a lot of people talking about the death of office, death of downtown. I personally I'm not ready to make that same conclusion as well. So in my former life, I actually worked at Citrix, which we do, virtual desktops, remote, a lot of remote work style products. So I spent a lot of times observing and working with our customers about working from home. And I mean, for me, I think ultimately it's not an either or conversation to say like, oh, you're gonna work from the office or work from home. Like it's a complementary style. It's this and that.
Yeah,
Um,
I really think it's actually going to be both for sure. Like, it's not like everyone's going to come work full time remote. It'll usually be like 3 days at home and then 2 in the office. This will still cut down on office footprint. So like future growth might be limited since they don't need as much, but this is not the death of office. It's just like,
yeah. So I mean, I think it'll take some much longer time to recover, and it probably also just depends on your company's philosophy or how your manager feels. Like I remember, 5, 6, 7 years ago or something like that, GE said, "Okay, yeah, everybody can work from home," and then they realized people were not being productive. They're just like at home watching Ellen or something like that, and they said, "No, no, no, everybody come back in." So I think we're gonna continue to see this I don't want to say flip flopping, but I think companies definitely need to have a more complementary approach to it. And I don't know where we're gonna end on that personally. Maybe it's similar to kind of like WeWork, but not in their crazy valuation and business model. But I mean, in a sense, like a lot of people, a lot of companies will provide options for people to hotel in, or WeWork become more of a property management company to say like, hey, we got these 200 seats, like you guys can use, or scale up, scale down as an office as a service if you want.
yeah.
Um,
My company was hoteling in for a while before the coronavirus, and I think they're very hardened on it because they're like, it worked well in the past. I don't think it's going to change. And since we're like somewhat technical, they want like the exchange of ideas. So they do want back to the office to a degree.
yeah, and I mean, I think it depends on your role too. If you're a coder or individual contributors that you don't really need to interact with the rest of the team, or you can do that remotely. Yeah, there's no reason for you to go in the office, right? You can work from anywhere you want. You can go work from Thailand if you want, but there's definitely value for that water cooler talk or camaraderie between colleagues and collaboration, in my opinion. And I think downtown, central business districts, it ebbs and flows as well. Like, sure, everybody wants to be in the suburbs, or they want more space, but by sheer physics, right, or definition of density,
Yeah.
it's not feasible. And I think downtown will still have its place, and um, we'll see what happens on this. I
Yeah.
think this one's a little bit more. If you look at the Magic Tables, like ask again later. So
I mean, how are you pivoting your properties right now for it? You're in residential and technically retail, and what sort of maneuvers are you using to, I guess, plan for the future?
yeah, I mean, we're primarily in residential. So for the commercial ones, like I was saying, we're we're focusing on making sure our tenants are successful and bringing in the traffic and the building management to make sure everything's clean, to encourage folks to come, or order online, and avoid waiting in line, being exposed to strangers, and do curbside pickup. Residential, I think we've been doing this for some time already, actually. Looking at previous cycles, if I may, I mean, if you look at a price as a normal distribution, um, we actually made a retreat to not focus on the high end anymore. We're trying to
Right.
kind of focus on that sort of um, one standard deviation away from the medium. And so in California, that's like right around sort of like the 700,000 price range. And low end, unfortunately, just not as desirable. Not as many people want them. And we're trying to find properties where um, it makes sense, both where once we build them to if once we build them, if we want to sell them, it checks off our metrics. But if the market shifted a little bit, like our return on cost If we have to rent out these units to hold for a shinier day, like it'll make also make sense as well.
Yeah, that makes sense. Okay.
So next slide real quick. Okay, so I think aside from the different asset class or what's been happening, um, I'll just share a little bit of how I approach a lot of this information. Kind of trying to decipher between the signal and the noise. Like there's, I know Nelson, you and I we talked about some of this stuff, including that chart you recently shared. I think you really have to put on the critical thinking skill hat right now. If you're looking at reports or headlines, they unfortunately, I mean, as a marketing train, as a marketer background, like they are trying to get your attention. If it bleeds, it leads, kind of stuff. So just be careful on when people use percentage, for example, and you kind of need to be able to zoom in and zoom out. Like for example, the chart that we were talking about, right? Like it had this giant number of people migrating in and out of different states, and at first impression, you're like, oh my gosh, okay. But then if you zoom, I guess if you zoom out, the big picture wise, I forgot what the exact number, but
Just
it's showing people moving out of California, but it was like 0.15% or something like
yeah,
that.
real small.
Right. And I will
Uh,
also say, go ahead.
I was gonna say, yeah, the same thing happening right now too, actually in multifamily, where a lot of people are worried about paying rent on time. Where there probably is a percentage, but we both keep an eye on. I'm assuming the National Multifamily Housing Council and their numbers, and it's like slightly slipping, but it's stayed pretty consistent in terms of like rent payments.
Hmm.
So
Yeah, and then the percentage thing too. The say like you drop 33%, and then you increase 50%, right? Are you back higher or lower than where you started? Like a lot of people think, oh well, like things are back to normal or a lot better than before, but no, like you're still technically still below the previous level. And I would say also psychologically to be I try to keep myself in check as well, like be aware of cognitive biases that you have,
yeah,
either sample size errors or self-confirmation bias, like meaning you're actively looking out for data that confirms your belief or your theories.
mhm,
So just keep an open mind, and I'm keeping my eyes on obviously unemployment numbers, default rates, and some of these macro data as well. So I'm actually going to pause here for a second to see
chat questions.
if folks have questions, or feel
Yeah,
free to raise your hand.
I'm gonna go through the past. Oh, okay. Who's planning getting the vaccine? Uh, oh,
Yeah, I mean, I think there's definitely more people than I thought that said they're not getting vaccine. And again, it could be sampling size error, but I like to get it. I personally plan to get it, and I think risk reward wise, it makes sense.
it's
So
definitely worth it in my opinion as well.
yeah,
It's just, yeah, I have friends who are working in the vaccine stuff, right? So it's like, it's not like an impossible thing like that's so far out there for me that I'm like, yeah, there's microchips. It's like like as an engineer too, like I would love to be able to make a microchip that small that you just inject in people. Do you know how hard it is
yeah,
to do this tech stuff? Like it's not that simple. You think you have like a battery that lasts forever, like while it's tracking you through, the like satellite or whatever. Like that's so hard to build, you know but yeah,
yeah. I mean, I think with Facebook and just with the internet, you know, that's it's hard to fact check things, right? And I mean, there are a lot of people that are very good at copywriting. Again, with as me as a marketer, like yeah, like they sound totally believable. I could see why like somebody or somebody's grandma, I'm like, oh my gosh, like don't, I mean, yeah, I won't get too much into it, but and he's asking, what do you think about California and New York markets after the vaccines? Do you foresee people flooding back here, or will the growth be slow? Um, I think it depends. So I think it's more on the slower end. I think people are going to be timid, or they might be enjoying their more space or country lifestyle. And some people they've moved. Like I have friends that moved to Oregon or moved to Nevada. It's like they bought a house, they're not coming back. um and there are times, and I think it'll take a little bit of time before people are like, oh man, like, yeah, this sucks. I want my blue bottle, or I want my craft coffee, and I want my nice food to go into the theater.
Want
So
to
I
walk
think it's
the street and actually like have amenities.
yeah, I think it's gonna take a little bit of time though. So
Yeah. Annie popped in and also said drops in condo prices are noticeable. Is it worth investing right now? I can say with a fact too, like in New York, we have a condo we're trying to sell, and it's like already taken, a 5% pay cut, and no one's buying it still. So yeah, it's very much so.
yeah, I mean, I would say depends on how big of a discount you're getting. Condos could make a lot of sense, although like condos in general, you can make a case like condos are just bad investments, but it could be really hands off, right? Like you don't have to worry about a lot of things in terms of managing and repairs or maintenance kind of stuff.
Hmm. Got it. Yeah. Okay. So travel's number one on things that people are worried about after COVID ends. Uh, oh, okay. This is not a question. Someone stated a thing. Stanley. It skews younger for demand. Not all people are looking to travel. I agree with that. Uh,
Yeah, I mean, I think travel. I mean, you look at Priceline, all these other companies' stocks, right? Like they've already all came back to the price they were before. I mean, I personally, I bought some cruise ship stocks. Like they're slow just because it really needs to have an all clear before they can set sail again. Like
right.
it's like you really are trapped in a giant COVID container if there's somebody that has it. So I mean, it's one of those where I buy in a whole separate account, so I'm not tempted to watch the
Yeah.
price fluctuation.
Yeah.
Um, so
Yeah. No, that
what
makes
do you
sense.
think will happen to office space in California? So this, it's something. It's very serious. I don't think it's reached the tipping point yet. I would say to HP moving to Texas and Oracle moving to Texas, both of them have presence in Texas already. And yes, like going forward, I think it will make a difference in terms of where they recruit and hire talent. But Oracle already has a campus in southeast part of Austin. Like they're just doing this for tax reasons. And yes, like if this continues to get worse, there it's not gonna be good for California. For this IMB organization, meaning yes, in my backyard organization, right? Like the head of that organization, she mentions like, hey, yeah, it's great if you already have a house, you got yours, cool, and you don't want these developments because you don't because of noise or whatever reason. That's
Yeah.
great. Your property is going up. However, if it reaches an inflection point and starts going the other way, meaning companies and jobs are moving out of state, good luck in that case. And
Yeah.
I don't think it's something I'm worried about yet. I mean, I am keeping an eye on it, but you know, I talked to friends about this, right? We're like, well, fuck, sorry. Maybe we should move out of California, and we're like, okay, where would you move to that has pretty much permanent good weather, and you can go hiking, go to the beach, and good food and all that. And I think like the only conclusion we had was maybe like Charleston. um, because like we mentioned about Austin, like Austin is 9 months of summer.
Yeah.
I don't know. I mean, I'm more the extreme case, but I get swamp. Yeah, I get swamp ass all the time. Like
Yeah, then if that's the problem, come on.
yeah, like I have AC on full blast when I'm when
Yeah.
I'm back in Austin.
Drop an ice
So
cube in your butt when you walk throughout the day. I feel like that'll solve all your problems.
yeah. So I think California still has that lifestyle going for them. So I'm not freaking out just yet.
Yeah. Okay. Yeah. I concur. I'm also looking at California, and so like on a base level, we know that valuations have to go up because of income or from rent or like a salary, right? And I think what people don't realize necessarily too well is like the rental income does not really justify it that much in like San Francisco, for example. So if the high incomes also leave, that's like the inflection point that you should worry about, right? Where it's like the people who prop up the prices, if they decide one day I'm gonna leave, like that's where the risk comes. But so far, net migrations, I wish we could see like a breakdown based on income level to to see like what the difference in the people leaving and people staying is. I feel like that would give a better picture of like differences in how much it affects the actual tax dollars and et cetera, et cetera.
Right. Yeah, I mean, it's definitely something to keep an eye on, and maybe one day when they keep raising taxes, and finally it does reach an inflection point or a tipping point. So hopefully that day doesn't come, and the politicians will come to their senses. I mean, honestly, David Chu, no offense to him, like he's the rep from the district in San Francisco. I'm like, dude, you're Asian. How are you so bad at math? Like these policies you're proposing have all sorts of unintended consequences,
Right.
and like rent. I mean, it's not.
It's about your
Uh,
constituents at a certain point. You don't even like think
yeah, it's not that I'm against welfare or providing goods to the people. You definitely should. It's just like these policies, they're so broad stroke and they're not properly thought through. So, but I want to just go through two more slides real quick, and then we can do the rest of
last
the Q and
question.
A.
Okay, cool, cool. All right, underwriting deals.
So yeah, I wanted to touch on kind of just how I approach it. Not to say like I'm perfect or this is the best way to do it, but I'm just basically constantly trying to filter out information myself in terms of actually deal making or analyzing or underwriting deals. I as a former trader, I basically look at risk reward a lot. And like I was saying, a lot of people either look at the cash flow statement, like what's my cash on cash, or if you're more of an appreciation guy, you're looking at your income statement right now. And actually, I started studying in accounting, believe it or not. So this
Nerd.
is kind of nerd language. But right now, the most important thing is your balance sheet. Like those two
Yeah.
other statements are lower priority in my opinion. So another Chicago guy, Senzel, he has a famous saying that liquidity is value, meaning both. To me, at least, there's kind of two sides to that point, right? Meaning that if you're liquid and you're tough times, you can get over it. There's value in that. And number two is if you have liquid, um, uh, if we have sorry if you have liquid capital in when there's this stress, you can take advantage of that as well to buy things.
Right.
Be careful with your debt. Again, it's a double-edged sword. Like a lot of people are doing 75-80% LTV before, like just I mean it's kind of personal, so it's kind of
Three
just
and
be
a half
careful.
percent. Yeah. FH.
Yeah, so it's kind of just personal, and be careful on that.
How you changed
And
underwriting since Corona? I know for myself, I've written off 0% rent increase for the first year before going back to like stabilized rent increases.
Yeah, I mean, we definitely are not factoring in any like rent increase or anything like that. And we're more in development, so I usually kind of try to run three scenarios in terms of our bill costs. Like for me, for us, the two, I guess it's less about the rent, it's more about the exit and the bill cost. So we do kind of keep an eye on and have a sensitivity analysis to see how out of whack it'll get before we're kind of in the uh-oh territory. um, but relating to multifamily, the one thing I do look closer than before is your economic occupancy break even point, meaning that like not physical occupancy, but meaning like the people that are actually paying in rent.
Right.
If your debt service requires you to have a 85% break even economic occupancy, like versus a 65%, like that definitely makes a difference, right? It's going to give you a lot more breathing room. Next slide. And so this is me putting kind of on my football coach hat, for everybody. As I mentioned, there's going to be, I think, more capital coming in. Competition is going to get even
Uh,
stiffer.
yeah, I'm already seeing
Uh,
it happen.
yeah, I mean, like, there's tons of people who want to get a license, want to wholesale, want to syndicate apartments. Good deals are not handed to you anymore. Like, good deals are made. You really have to have a little bit of special knowledge, in my opinion, or something unique, something different, and find what's your edge in this time, like whether it's you just have a lot of capital, or you have all sorts of broker relationships to get the deals before it hits the market. Find something unique about what you do to try to get the leg up. And lastly, you know related to the Facebook group, I help other along the journey if you can. Just kind of my preaching soapbox moment. I think in general, um, everybody in real estate has an abundance mindset mentality. Like, there's more than enough to go around. I've benefited and fortunate to have a lot of other folks to share with me their advice, or different things to get to where I am, and I'm very open as well to help wherever I can. So if you have the opportunity, obviously take care of yourself, and if you can, take care of others as well.
Thank you. Yeah, much appreciated. Is that the closing
Um,
statement?
yeah, so that's pretty much it. We'll see if there's any other questions. I
I
think
went over the last few then.
Yeah, I think, and there's the verdict is still out a little bit. Like, well, I think now we know the Georgia runoff. Like, we'll
Yeah,
see who the Fed chair, what the I think. Well, sorry, Janet Yellen is heading up the Treasury, but there's going to be a new Fed chair soon. We'll see what happens to all these forbearances as well.
gonna be a money
Um,
printer still. Something tells me that
yeah.
gonna change any bit.
Hmm.
But all right, cool. Let's start asking these last few questions. I don't want to keep people for too long. All right, North Carolina market. What is your opinion? Lafayette.
Um,
Well, is there a specific example? But I think
Yeah, I'm not familiar where that is precisely. I do know a little bit about North Carolina. I'm a fan. Um,
yeah,
my parents, they have a manufacturing business, so we've been out to Charlotte or Raleigh, Durham. Um, I have a feeling, or at least I hope, like Raleigh, Durham, the Research Triangle area, could very well be the next Austin. It's a
yep.
college town vibe. It's kind of cool. And then once you start throwing jobs on the adding that fuel to the fire, I that's basically the story of Austin. So
Yeah, we talked about this earlier, yeah, and I actually visited too for when I was like looking up grad schools. So I was like going through, you know, the acceptances, and I was like, I could see the vibe coming in there. It was like really nice sunlight, and like everyone that ends up like in that triangle kind of stays. So like I could see, you know, that sort of taking over, you know, the same way,
Yeah.
and new
Is
people out
it
there.
is it too late to get into Austin? I think Austin still got legs. Unfortunately, not my cup of tea anymore. I again, this is personal. This is how I am. Like when everybody's going one direction, I'm just sort of ingrained, trained to look a different way. I think if you want to, like, I would actually look at San Antonio a lot closer.
Mm. All right, there's a large bifurcation event happening in travel hospitality. What do you think about that in terms of like young and old people who this? I'm guessing that's what they meant, like deciding whether or not uh, to go into into like the Airbnb hotel business.
Um,
I think
yeah,
that's
I'm not quite sure what the
yeah.
question is asking.
You
I
you
mean,
asked that, Stanley. I would love to double check what that means. But I would like to say also to Jeff, I don't think it's too late to get into Austin. I just bought a house there, 10% off appraisal value, which is usually conservative, which means like hopefully in like 2 years I can refinance out my entire equity if it keeps appreciating at this rate. Um, the thing too with Austin is like you have to understand there's no cash flow that will really be substantial enough. You're gonna put a little bit out of pocket unless you find a creative way to pull the money out. But yeah, that's isn't that? Would you agree, Jason?
yeah, I think Austin, like I said, still has potential. It's cool, and a lot of companies are moving there. Um, the infrastructure, it's a little bit
Trash.
yeah, at least a lot to be desired in my opinion. Like traffic is already so bad.
Well, you're just
Um,
in luck. They approved 2 train lines to be done in like 7 or 8 years. So imagine if you're on that train line in 7, 8 years, it's gonna be crazy. You know, it's their own little
yeah, it's
system.
I mean, I think it's actually the Cap Metro thing, it's actually encouraging because I there's that one line that goes from downtown to Cedar Park, and actually there
Right.
were a lot more people riding it than I expected. So
Yeah, it's only
um,
gonna pick up more Californians are moving there and they actually care about public transit. All the
yeah.
Texans will probably stick to driving, but I know like as like a New Yorker, Californian, Chicagoan, like like I went there and I was like, oh wow, there's a train line. What? No one uses it? Like that was like the thing that blew my mind. I was like, isn't this more efficient and cheaper and you don't have to sit in traffic? You know,
Yeah, it's kind of a culture thing. People in Texas they like to drive. They want their trucks. So
I got a truck. I'm taking the truck down there. I'm right in. They're like, "Who's that?" And I'm
yeah,
like, "Yeehaw!" And then they're like, "All right,
yeah.
go along."
You need the shotgun rack on the back. So
Yeah, that's how I'll blend in. All right. Last question before we finish off. Stanley says, "Ghost kitchens. What do you think of that instead of just your food hall?" And then, would you stick to Airbnbs versus rentals? I can kind of answer that last one. It depends on your
yeah,
market. Yeah.
yeah. Ghost kitchens is interesting. I think it's very location specific. You need you need the density for it to kind of make sense because delivery drivers, like, they're not going to be, if they're making 30-minute drives for a delivery, like doesn't it doesn't make a lot of sense. Airbnbs, yeah, I think it kind of depends. Like more of the if it's like a day trip or short drive away from city centers or big cities, they're doing really well. Like Tahoe's doing really well. I have a
Yeah.
place up there.
I would
If you're
recommend out there. Yeah.
Yeah, like Palm Springs, Joshua Trees, like outside of LA, they're doing really well. But the city metros, they're not getting those visitors, right? So it's not if that's your plan A, I would be a little careful with that. So
Yeah. Yeah, it just depends on your risk versus reward tolerance, I imagine. Like
Uh,
you said, Jason.
And if Nelson, if you can go to the next slide, if or you can share this with folks. I have my contact info here. If anybody would have questions or want to reach out to me, I included the two meetups that I run as well. So
Perfect. All right. Well, if anybody's interested, you can pause this yourself. Thank you again for talking to us. It's been like a full hour. Thank you everyone else for showing up tonight as well. And I hope you have a good rest of your week. Cool.
okay, thanks, guys.
Yeah. Night.